G'day, buddy miners. 2 stories today, 2. Oh, no, 3. We've got a bit of update from Firefinch.
Yep.
Bloody boss. Down 12%, probably 11 last time I looked.
Changing all the time.
Yeah, mate, changing. Sparks just fucking, just sparks flying everywhere. And, right, we're going to go into that because she was talk about a reaction to directors selling a good chunk of shares, and I think we can attribute, based on the performance of other uranium stocks, that is the reason, because they haven't gone down 11%.
Pretty polarising series of events since that one came to market, aftermarket yesterday. Mate, blown up Twitter. People got very different views on that one, but look, we're gonna talk all about it. I feel a bit emotionally drained today, but I'm keen to talk about it. I've done no work, as JD's done all work.
Me and JD are fine, but Trav got 50,000 views on Twitter.
Oh, jeez, that's not many, mate.
Do you have a follower goal?
No.
Nah, just quantity, not quality, not quantity. Trav. I love it. End with your Donald Trump hat on.
It's casual hat. From the side, it looks like a MAGA hat. Yeah.
JD's gone bloody balls deep into BHP-Anglo. It's a bit of a D-Day, JD.
Mate,
would you say?
I say balls deep. I think we might just be scratching the surface here. We're hoping to go even deeper later today. We might actually have a bonus episode for the Money Miners tomorrow. Tomorrow is, of course, the day that we'll hear whether something's gone ahead, not gone ahead. Is there another extension or whatnot on that front, mate? So, yeah, I'm very keen to see what happens there.
Right, let's rip in. Number 1, Boss Energy, the newest Australian uranium producer, has gone down 11% today.
Yeah.
And on the back of, lay the land for me.
All right, so if you didn't see it, if you might have been under a rock, like Trav said, this one has caused quite a bit of a tension. 3 directors sold. They've got 4 directors, 3 have been selling. So you got the MD, Duncan Crabb, the chair, Wyatt Buck, and another director, Bryn Jones, selling pretty substantial amounts of stock. So there's only one director, Jan Honeymoon, who she must have drawn the short straw. She didn't get to sell any. Now, this represented 83% and 63% and 63%, respectively, of those directors' ordinary shareholdings. So, as you'd kind of expect, the stock didn't react too kindly to that. Trav, you had a bit of a deeper dive into how the market reacted this morning. What'd you find out?
I think at some point, intraday, the stock was down 12%. I mean, like you said, Matty, don't know where it's closed today because we're sort of filming before market closes, but it's a pretty remarkable intraday move for a $2 billion stock. The replay is worth watching. Just watch the market. I mean, Matty loves this stuff.
How good's the spark fucking animations? Check this out.
Watch this replay.
Look at this is where it's, I guess, heading into the open. Look at that look at the trading, look at the red, look at the drift, and boom, 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 we're down 11% as we speak.
For those tuning into the potty, we're showing a bit of a course of sales you can see in the lead up and following.
Mate, no point tuning into the potty from now because you can't see the spark chart. Get on bloody YouTube.
You can visualise it.
Yeah, just picture Christmas lights.
It's a flurry of bids and sales. It's a spectacle, isn't it? It kind of feels like KFC Classic Catches when you talk about this replay.
Oh, mate. Got it and gone.
You can also, contextualise the volume we've seen in the stock today. Last I saw it, I think it was like 12 million shares had traded. It was basically the amount of shares that had traded last time I saw it, and it's still going up, it was 11 times the amount of shares traded yesterday. It was 6 times the weekly average. It was 5 times the monthly sort of average on a daily basis there. And you can even forecast the bloody predicted volume by the end of the day, but you can just see how much volume has gone through that stock today on the back of this news that the directors had sold a pretty substantial part of their share ownership there. JD.
You do. You sound drained. Your voice is like you haven't got much in you. Like fucking hell.
And it's good for the directors as well because the stock's down now about 15% from the price that they sold at. So they've had a little win.
The average price. They report the average price, but I think they started selling on the 21st. When it was as high as 590s or something. I don't know if they top ticked it or not.
Yeah. I think 563 was the average
price,
Okay, so when you say selling, directors selling, yes, it's been bloody around for ages. They've been there from very early on and taken some cash on the table. But, Trav, why has it created this stir? I think directors can sell shares.
But they can sell shares, Matty. It's just I've taken issue with this, and I'm happy to publicly stand behind why I take issue with this. I can empathise with the desire to take some chips off the table. I get that, especially if you've been there a long time. You've got the majority of your net worth tied up in it. I get it. We talk about the Lassonde curve and ramp up all the time, right? And ramp up is the single point in a mining company's life cycle as a mining company transitions from a developer to a producer, where it can either go well or it can be a catastrophe. And insiders of the company have visibility on what the probability of that's going to go, if it's going to go one way or the other, or if it's going to be rocky and then things will go good. There's whether we like it or not, there is real. There's no such thing as perfectly cleansing the market in ramp up, because you as management have foresight on what's ahead. And I just think it's a bad look to sell during ramp up in the first place, but it's a particularly bad look to sell 75% of your skin in the game in a period in time of a mining company's life cycle where things are so risky. They can go well or they can't. And in Boss's case, they've got they do have $300 million in both cash and inventory to things don't go smoothly. They can buy some time and figure out a way as they navigate that. But 75% is a completely unacceptable quantity of skin to sell, in my opinion, in that phase of a mining company's life cycle. I'd love to see that maximum 25%.
Yeah, and I think just to be clear, when we talk ramp up, if we're talking Bellevue ramp up, that's probably 6 to 12 months, maybe. When this is, I guess, very early in the ramp up for this project, because ISR is probably a couple of years from what I've been told. Your class is a ramp up, so it's in ramp up, but it still does have a lot of ramp up to go before you can claim steady state. So
totally.
They are a bit longer. So it's very early in the ramp up.
Totally, this is max unknown variables right now for the market. But it's also the market will get prematurely excited because you see they produce something, but we don't know what the cost basis of that production is going to be in the long run yet. And that's kind of, maybe management will have some foresight on where that is and where that's going, but the market doesn't yet.
So we've also heard a bunch of people sort of claiming or saying to us that they're exceeding where they thought they'd be at this point in time, fellas. A lot to that sort of effect, but we're a couple months in. First drums, as we already spoke about a month or so ago, were delayed twice. So I think it's not quite justified to say that they're exceeding expectations. And as we also spoke about at the time, Boss tried to just sweep this under the rug. They tried to act like there was nothing wrong. They barely sort of mentioned it. Like you said, Trav, it's the point in time where there's the most information asymmetry. It's just a super, super high-risk point in time for a mine that is not a greenfields mine. This has been a mine in the past from 2011 to 2013 under the ownership of Uranium One back at the time, and it had issues. We'll play a snippet now from our chat with Justin Hun from Uranium Insider from just a couple months ago, giving his thoughts on the project.
The ISR's got it raised its head in Australia, which is exciting with Boss Energy.
Indeed, yeah, and that's the market's very hopeful about that project. Uranium One owned it before Boss, and they had a very hard time with it. There's complex geochemistry within that deposit. The Boss team supposedly has done a lot of work on it to figure it out, and they're getting it going. So fingers crossed. But it's not just a flip of the switch. It really isn't. And so even the primary producers are having problems right now, and that's Cameco and Orano in Saskatchewan. That's Kazatomprom and all of the joint ventures in Kazakhstan.
So like I said, after opening in 2011, the project was shut in 2013. Obviously, that was quite a volatile time in terms of the broader uranium price, but they produced 600,000 pounds during that commissioning phase. Back in the day, Uranium One used solvent extraction as the means for extracting the dissolved uranium. Boss flicked that over to ion exchange. So there's a couple technical challenges that they look like they're overcoming. Like we said, there was a bit of a delay, but there's just added risk along the way. And ultimately, Boss picked it up for less than $10 million. So there has been quite a phenomenal amount of value creation at this point in time. But there was another red flag that we spoke about just a couple of weeks ago with the CFO and the general manager leaving the company. And the company thought this was barely worth a mention. They didn't even acknowledge them on the way out. They just said that they'd hired a new CFO and a new general manager. So that was another red flag that just goes, on that checklist that we see along the way.
So Trav, you mentioned costs. We haven't really got any indication what they could possibly look like as yet because it's so early.
I mean, brokers have got their models and all that sort of stuff, but all that stuff's a bit, airy-fairy, and people look at the DFS, but, we know reality with this stuff is a lot harder, and it's ramp up. Like, let's say you have a challenge on ramp up. I've not been in that situation. I imagine it's pretty hard, but if you have a challenge, like, how do you figure out, oh crap, because this thing we're getting slightly worse recovery here. How do you know if you tweak this, you'll actually get to what your forecast recovery ultimately will be? Or how do you know what if your actual steady state recovery is way lower than you thought? You know what I mean? That stuff doesn't come out immediately. It comes out over time. And like I've got no information about how things are going at Honeymoon. All I'm saying is, this is it's like peak unknowns, peak risk, and this is what we've seen from the directors today is not as bad as the MD leaving effective immediately and then subsequently rinsing all the shares on market without disclosure, but it's less bad, but not much.
So, Matty, in terms of trying to put some numbers to it, they put out an enhanced feasibility study back in 2021. We know the industry has gone through a fair bit of cost inflation since, but the all-in cost at the time was US $32 per pound, and they haven't shared any sort of further work. If you look at a lot of the broker reports, like Travis sort of said, these guys will just factor in the numbers from that study.
Yeah, right. Can you insure for ramp up and cost inflation?
I think you might be a bit off your head there, Matty.
You reckon?
Yeah, no, I don't think you can do that.
Let me call a bloke. Hold on. Let's check the website. 2 secs, lads. All right. Oh, it's ringing. Hey, Adam Batista, CRE Insurance. Mate, there you go. Shit, that was easy. Fucking that's the owner. Just picked up off the website. Phone number. Hey, just called off your website, creinsurance.com.au. Bloody, and the owner picks up. Mate, sorry to bother you. Quick query. Can you insure for ramp up and cost inflation insurance? Yep. Yep. Worth a chat? Not out of possibility? Yeah, right. Interesting. Yeah, no, you have a yarn. Yeah, no, cheers for that, Cobber. I might forward some people onto you. Yeah, no, he reckons anything's worth a chat.
You heard it here first, Matty. Well done.
Yeah.
You never cease to surprise me.
Yeah.
You miss 100% of the shots you don't
so
take.
he seemed like those one of those guys that there's like can-do attitude. No is never an answer. So
we love can-do attitudes
anyone
here,
that
Matty.
wants to inquire about ramp up and cost inflation insurance, CRE apparently is the people to call. So, is there any more reasons why the fuss?
I mean, there's another one that slapped you right in the face. They released it after market at 5 p.m. That's the age-old trick of trying to sweep it under the rug and get away with it. I mean, did they really think that one's not going to get picked up? Just be upfront about it. Put it out before market. When Boss, like we've said a couple of times already, they're notorious for these sort of fluffy, no substance type announcements. Not new, but it really leads to the point, and we said this a couple segments ago, that you just can't take their announcements too seriously. They're just doused in adjectives and superlatives and adulation, and it makes you pretty suspect of the company sort of going forward. But this all sort of leads us to the bigger question, which we've kind of touched on. When is the right time? When can directors take some chips off the table? If they have created shareholder wealth, they've done something right for the shareholders of the company, they should be incentivized for that and they should be rewarded for that. And Trav, you've sort of given your thoughts there on a sort of loose figure of in and around 25%.
I mean, look, in the case of Boss, the share price like 70 bagged, and you probably got all your net worth there, whatever. I get that. I don't ever think it's appropriate to sell 75% during ramp up. What I would want as a worst case scenario, sell up to 25%, right? And then I think the vocal crowd could understand that, could comprehend that, especially if there were some previous commitments not to sell before production, blah, 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 like we've heard here. 75% sends a completely different signal to the market. It signals that you think the stock is overpriced right now. You're more out than you are in. If that's the whole, there's that whole quote. It's like, watch my actions, not my words, kind of thing. And the actions there indicate that I think the stock is overvalued.
And
well, hypothetically, what if? Look, I'm a uranium bull at the moment with everything going on. What if there's a spike in uranium equities and the price goes off its head from 90 to 130, and then they sold compared to selling now?
Well, I don't.
How would you feel about that?
No, it doesn't change anything. Like, this is irrespective of the market, my view. And I put that in a tweet today. It's like, Boss price can go up or down. Like, I don't know where it's going to go, and it doesn't matter. That's not the point here. Now, the Bosses, we've heard from someone who's done the numbers that, like, if you back out the implied uranium price of Boss's valuation before the sell down began, it was pricing in $144 per pound US uranium price in the stock price. So, like, on a relative basis, overvalued. All the equities are like that. I get that. But I don't care about the uranium market. This is optics of an MD selling down in a mining company's most, like, risky and critical and information asymmetric part of their life cycle.
But if there is a mad spike, they're just not allowed to. How much they could sell 25%?
20, that's fine. Like, I think 25% is understandable. But if you're more out than in, the optics are horrible. Right?
Yeah, but are they? Yes, they're more out than in. But as you said,
an MD is not a
bag.
shareholder. An MD is not a punter on the market like you and I, and just the stock went up, I'm gonna trim. That's an MD is supposed to have a long-term outlook on the vehicle that they're in. That's what you as a shareholder, you kind of hope that they're. Like, if you're a long-term, that's what you kind of trust them to do. I don't want the MD to be a punter on the market like we are. That's not what I want an MD to do.
Yeah, but say if it 10 bagged instead of 70 bagged, so they've gone more out than in. But if it 10 bagged, and they sold 25%, you know what I mean? Like, they've obviously made a lot of money, and it's like, but if it 10 bagged, like the ratio does change because they still retain a lot of stock at 25% because it's gone up so much.
Yeah, sure. And some people have, like, made the comment to me, oh, this is about, locking in your financial future, blah, 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 blah. You could have done that by selling 25%. You didn't need to sell 75%, in my opinion.
Yeah, I disagree. Or the point, I think, is that more of his net worth is now outside of the company than in. So things could go tits up and it just wouldn't matter anywhere near as much. Because if you sell 85% of your stock, like, and you're running a company, you're probably thinking about leaving, right? Like that. There's no way I'm running a company and I'm selling 85% of my shares and I'm thinking too long about being there in a couple of years in the future. Maybe that's just me, and it wouldn't be the company I want to invest in because the actions speak louder than the words there. You'd be thinking, like, the stock's done phenomenally well. I think it is priced really well. And I'd be on the way out. If I was thinking about being in there for the long term, I'd be thinking about using that overpriced script, not to sell my stock, but maybe to try and pick something up on the cheap or do something like that.
Yeah. If I was in that position and I got to that point, I'd be like, I want to buy a nice house now. And you can't realise that value until you sell your shares.
Yeah,
you could keep it in there forever.
No, but it all comes down to the quantum that you sell.
It's not like. Yeah, you can frame this as a false dichotomy, and some people have done that where they say, but why are you anti people taking chips off the table? It's not about being against someone taking some chips off the table. It's the quantum matters here. 75% and 25% are such different.
I mean, he's earning in cash over $1 million a year. You can buy a pretty good house.
I think it'll be defined on the next 1 to 2 years.
I disagree because who knows what will happen there. Like, that's just my view.
Yeah, but then that'll be where the judgment is after that, because if he sticks with it and continues to grow the company, even after selling 75% now, then you can say he sold them for the right reason for himself, but still put everything into the company and grew it. This is all hypotheses at the moment, but I think the real judgment will be made once that is determined, and we don't know what that is.
Yeah, and the analogy I draw a bit is like, and I do think it's an injustice to Duncan. I don't know him personally or anything to make this analogy to him, given the friend of the show we're going to bring up. But like Brett Lynch is fresh in our minds, right? And that guy stepped off the board, stepped off of Sayona as MD, effective immediately, massive volume the next day. God knows what he did with his shares. And in the next like month, 2 months after, like that's when the market became informed about all of the real ramp up challenges that were happening at NAL. To the detriment of, say, owner shareholders who hung on, and defended him when he left and all that sort of stuff. So, I just think there's a responsible way to go about this, and this what I observe here, it's not the responsible way to go about this.
And the kicker is it's the CFO and general manager in the lead up. If this happened on by itself and there wasn't the stuff about the sort of sweeping under the first drums under the rug, but it's just I can see there's a few things building up, but time will tell.
There's another aspect I want to talk about, and that's the role of a board in its responsibility, the corporate governance of the company. So from today onwards, I don't see the company's board as being sort of seriously aligned with investors. And I mean, bar the directors earning more performance rights and oppies over time if they sort of stay there and they sort of force them through. They haven't had so much luck doing that in recent times. They had pretty hefty against votes at the recent AGM. And like we've just sort of said, we're probably at the more extreme end of like how aligned we want to see boards and management with the shareholders of the company. It's something we take super, super seriously. But like we sort of said, it doesn't matter too much anymore going forward for Crab, Buck and Jones if production turns out to be a bit of a dud. And there was a line in the statement I just want to read out that the board is acting to ensure Mr. Crab and the team are incentivised and aligned for the company's next stage of expansion and growth. And I just can't take that seriously. I mean, look at the board. It's a 4-person board and 3 of them just sold stock. So Bryn and Wyatt are hardly going to say, like, hang on, Dunks, you should probably sell a bit less than 85% of your stock. At the same time, they're trying to get approval to sell 65% of their stock. And in general, we've spoken about this a bunch in the past, we are pro small boards. And I don't mind seeing a board of 4 or 5 people. I think that actually leads to things getting done. But it's clearly been a bit ineffective in this instance when 3 of the 4 of them are trying to sell stock.
Yeah. Oh, mate, I echo that, sentiment completely. Yeah. And I mean, look, it was brought to our attention that the recent AGM had its fair share of, resolutions with pretty substantial, quantums voted against the employee incentive plan. 47% vote against it. That nearly didn't pass. Issue of performance rights had a 29% vote against. The new constitution had a 62% vote against, so that one actually did not pass. But yeah, I mean, like those numbers are pretty striking. And you look at the register; it's pretty institutionalised. So there must have been like one of the proxy recommendations to vote against on some of those resolutions, is my guess. But I think it just all paints a broader picture.
What about the wider perspective on the Twitter sphere, Trav? Your bloody second home.
Lots of different views out there. You remember Patrick from Uranium Twitter?
That is
Patrick?
the best name ever. It's Patrick from Uranium Twitter. What a fucking legend. We got to get that recording, and every time we mention it,
just play that. Go on, Patrick from Uranium Twitter. He goes, I'm all out of BOE today. As a precautionary measure, entry was $1 to $2. Happy to take profits with a $5 handle. So, respect the transparency there. I think I'm just trying to articulate that there are some long-term holders who've had lots of gains who observe the actions of management and think, well, heck, if management is showing me with their actions that this is overvalued, that I'm out. Keith Good, he talks about some of the challenges that can occur with ISR. He says, question is what recovery rate? And they have the A team being ex-Beverly. Always the issue with ISL, and there are any salts in the system. If so, can drop recoveries about 20% closer to 60% or less. Other issues.
That's the carb when they talk about carbonates, isn't it?
Oh, I've got no idea. I'm way out of my depth here.
Something like that.
There's other issue with ISL is faulting. ISL is basically pumped down solution to point A from surface, passes across strata and target depth, and point B is drawn / pumped back to surface. Problem is faulting, i.e. solution is unable to simply move from A to B. And anyway, you can read his tweets there. It's the point I'm just making is like there are some things that we're not going to know about what it all looks like right now. The market's pretty lofty right now, baking in a whatever smooth ramp up and an elevated uranium price, but there's like a lot of water under the bridge before then. So it's just the point I want to make.
There you go.
A lot of other people are defending Duncan on Twitter too. There's lots of that. And a lot of people disagree with me, and that's okay. I'll stand by what I think.
That's what they were, mate. It'd be boring if we all agreed.
Absolutely.
Fuck that.
I just want to...
good for views.
I think we should just leave it with the comments that we are all for management getting wealthy through the outperformance of the stock of the company that they manage. And if they're rightly incentivized to outperform, they fully deserve to be compensated for that. Absolutely no problem. And that's what leads to awesome companies and a thriving market and all these sorts of things that we love talking about. But I just think, like we sort of said, in this instance, with the uncertainty surrounding everything, the fact that they flicked it out after market and the way they went about it, I think that's what sort of rubbed me the wrong way.
Right.
Echo that.
Get on to the big dogs. The big BHP-Anglo deal. God, jeez.
Well, I thought we should
Never talked about BHP so much in my friggin' life.
It's been a whole week, and in this week we've sort of seen the timeline extended. So worth checking in, as 5 p.m. tomorrow London time is the the end of that extension period. So there's a few talking points which I thought we should chat about, fellas. To put it into perspective, the undisturbed share price for Anglo was £21.11. That was at the close of April 23 before the rumours emerged. Anglo called the latest bid a 29 and 34 pence offer.
Nice work there, JD.
Yeah, mate. Almost stumbled. But if you'd asked BHP, they said they offered £31 and 11 pence. They used their May 22nd price and the previous day's Amplats and Kumba prices. So the way in which they measured were a bit different there.
Yeah, I mean, it's a bit cheeky. You should stick to the undisturbed prices here, but these things are fluid and dynamic.
The one makes their deal look better, Trav. Come on. So firstly, I think we should just hone in on the wording that Anglo have used. They're no longer using the words significantly undervalued in their third rejection. That is how they described the rejections 1 and 2. But they do maintain, as we'll flash up on the screen here, serious concerns, i.e. the risk that they are bearing by being responsible for the spin-outs of Amplats and Kumba. And, the way they are now speaking gives a bit of an indication that they're a bit more focused on the structure as opposed to the value. I mean, a lot of the shareholders, the big shareholders for Anglo out there have been saying we need to see something with a 3 in front of it, i.e. over £30, which I think they're using the Anglo way of viewing that. On the flip side, you got BHP. They've been pretty rigid in their structure. All three have seen no change in how they would treat Amplats or Kumba. So I think it kind of leads into BHP and how they've been wording their recent statements and what we can sort of surmise from it. They've said there'll be no improvement, and they called their third offer final. Now, I put it in quotation marks because I think it's a bit cheeky. They had a whole heap of caveats to using the word final. What they said is this represents a final offer ratio, and that potentially allows them to sort of throw in some cash or make other sort of tweaks as they see fit. Another caveat was that if the Anglo board comes to the table and recommends a slightly higher figure, then they can increase their offer. So, I mean, all in all, to me, it makes a bit of a mockery of the word final. And we saw it here in Australia with Seven Group and Boral not too long ago. They called it best and final.
Best and final is what you normally term things. I mean, this is final, but not
I mean, but
best.
things operate slightly different over there.
And there's still truth in takeovers over there.
Yeah, and they've clearly toeing the line on these UK takeover codes of what they sort of deem allowable. In the instance with Seven and Boral, they ended up getting in there and issuing a dividend to try and incentivise those last few stragglers to sort of get over the line. What I mean, do you have sort of comments, Trav? You've been on the actual banking side.
I think it's fine. Yeah, I mean, what they're saying is we're not going to change the merger ratio. Like I said, there's two big and important variables that can change from here, and that is like how much cash you're going to chuck in, and the other one is are you going to come to the party on structuring it in a more palatable way.
Yeah,
and they're both like pretty important considerations that make a potential offer a lot more attractive to Anglo.
Yeah, I mean that sort of leads us in neatly into the deal machinations, how we sort of see BHP pulling the various levers that they still have at their disposal.
What are the levers for BHP to pull?
Get K-drill?
Huh?
Say that again, mate?
Hear me out. This is a bit out there. But, BHP always talks about culture.
Yeah.
The BHP culture. I don't think anyone in Australia has a better business culture than K-drill. Maybe ours. Ours is pretty good.
Yeah.
Yeah.
Would our culture fly in BHP?
Oh, no. But better can be interpreted many different ways. Ryan O'Sullivan has driven down the throats of the Cadrell team that everyone will look after each other.
He does do that.
No bloody drillers or offsiders laying on the ground in the middle of butt-fuck nowhere with bloody heat stroke. They look at that is the Cadrell attitude. There is BHP want to look after the workforce, pre or post merger. So do bloody Cadrell.
Yep.
Safety standards. BHP loves safety. Cadrell ain't cowboys. There's the wrong way, and then there's the Cadrell way.
Only two ways to do things
There's
in
only
life.
two ways to do it. This one's a bit obscure. Validity of samples for exploration.
Tell me, Matty.
Mate, it all bloody starts with sample management in RC drilling. Tell you what, if Ryan O'Sullivan reckons a bloody sample has been contaminated or is inaccurate, makes them re-drill the fucking hole at Cadrell's cost. Mate, if those sort of standards and culture aren't what BHP is after, then they do not deserve this merger.
Mate, you've sold me.
See where I'm coming from?
I see now. It actually makes sense why BHP is probably going to walk from this deal now.
Yeah, because they haven't got Cadrell.
Can't do it.
Yeah, told you it makes sense. What other mechanisms after they do that?
Well,
Levers.
We're talking about two big ones here. So structure, we're really talking about the South African operations at the core of the structure. So you've got Kumba, they're 78% worth about $10 billion, and Amplat's roughly 70% worth about $12 billion. So far, like I said, BHP have been pretty adamant that these are not going to be a part of BHP. And I guess the question is to you guys, given the fact that Anglo have already announced that they'll spin out Amplats in their own new strategy, can we see Anglo accepting a deal in its sort of current structure?
I actually don't know. That all depends on how firm the Anglo board is on this. So it's pretty well reported that BlackRock's Evie Hambro is kind of putting the press on getting a deal done here. I think you showed up his share, what's in the fund, and he's overweight Anglo at the moment. So of course he'd be advocating for BHP to pay up and get a deal done.
Huge shareholders, and he'd also sort of pressed for like you said, the discussions to continue. Really sort of put the press on for this to go on another week.
I get the sense that Anglo's going to be firm on this, and that BHP is going to be firm on this, and that's just a stalemate on the structuring.
Yeah,
I get the sense, unless they pay up, to the roof, and then happy days.
And the only way is going to be a cash kicker.
Sure, yeah. Which
Well,
BHP
they're fucking
won't
dragging them out as long as possible to get the maximum bloody bid they can from them, in a way.
Yeah, this can still drag longer. You can keep agreeing to extend things over and over. Maybe, each time
Can they agree to extend it without going into that bloody...
Yeah, they did that last
that
time.
blank period thing?
Yeah, they put up or shut up. So, yeah, I mean, that's what happened this week. Came about by mutual agreement of a 1 week extension of that. So I think that that can happen again, but maybe you give a little bit along the way. So maybe, the big thing here is just getting, being able to do mutual DD or whatnot, I'm sure. But
we'll see how sort of stubborn they are, and hopefully in the chat we have tonight we can get a bit of insight with speaking with someone in South Africa to the South African government's role, because they have quite a bit of sway in the matter. So hopefully we'll get a bit more insight. There was one other aspect I think worth mentioning. Whilst we're on a hot run with corporate governance and whatnot, let's have a look at Anglo's board stock interest in the companies and ultimately what their sort of incentives are. So I'll flash up a couple of things from the annual report, but you can see at the time of the first bid, 7 out of 10 of the Anglo board members owned less than 100 grand in stock. And, for 7 of those, far less than 100 grand. I'm talking with one of them owning £13,000 in stock, and they're sort of sitting on the board there. And here's the kicker.
So can he sell 75% of that?
Let's not go there, Matty. But here's the kicker, mate. They are earning at least, talking about the lowest earner of any of those directors as a non-exec director, £134,000 per annum. So I think that is just abysmal. And I get in certain circumstances you want one that sits a bit more independent, but we're talking about, 7 out of 10, like 70% of the freaking board doesn't have a material interest in the company. It doesn't really affect them what happens one way or another here. I think
It does in some ways because
if they did have a material interest, they'd want to get a deal done.
no, well, that's the thing, right? Like they do care what happens because if a deal eventuates, you're
they'll be
out of a job, and you no longer get this like plum job income.
Yeah,
and that'd be the concern.
Yeah, absolutely. And I mean, for comparison, you've got BHP also has a 10-person board. The smallest shareholding is 340 grand of any of them, and the lowest salary, $344,000 per annum. So just to balance out that.
$344,000 for a non-executive director.
Non-exec director. Yeah. So I think
BHP, give me a buzz. Have you got a bad CV?
Yeah, with all that sort of said, fellas, by this time tomorrow, a bit later, we will
Have an update.
Or maybe Thursday morning is when we'll see it.
Koala just sent me a message saying he reckons 80% conviction BHP walks over price. There you go. Anyway.
The big man.
The big dog himself. Right, Firefinch update today. Following on from update yesterday and what the hell's going on. Rip through it, boys.
Firefinch come out, it was like a 1 p.m. announcement today. They say, basically say, here are the steps ahead for us to distribute our assets to shareholders. Firstly, they've got to have some final negotiation of the sale of Firefinch's interest in Morila SA to Sorum SA. Hang on, didn't they say Firefinch had no liability in relation to Morila SA's liabilities yesterday? Anyway. Secondly, apply for a tax ruling from ATO, which may take 3 to 6 months. Thirdly, distribute remaining assets in the most efficient way, like likely in an in-specie distribution of the Leo shares. Fourthly, they plan to distribute the remaining cash with a carve-out, of course, for what they've got to pay to the in respect of the Mali settlement, which is like 11 million, and then there's some admin costs in there, which also include the cost to defend the nebulous claims against Firefinch per yesterday's announcement. I found that pretty funny, of course. And then there will be a shareholder vote sometime soon to vote on these proposed distributions. All that said, bloody hell, gents, it's gonna when we can move on from this, it's just gonna be brilliant. If I have one prediction from here. Now that there's a settlement and all of this, I think we're past peak fear of mining investment in Mali. I think we might be able to turn over a new leaf pretty shortly there. That's all on this one.
Well, I don't know who'd want to go there after fucking having to give 30% to the government now. The landscape's changed a bit.
Yeah, there's still some good deposits there. So.
Well, we heard some sort of interesting feedback that it is no different to pretty much every neighbouring country there.
Yeah, I suppose the 10 to 20 was pretty good prior, wasn't it?
Yeah, and that extra bit has to be bought, not so. Yeah. Anyway,
right. Thanks all the partners. Bloody it, we have in the show. CRE Insurance, thanks for the call, and Cadrill Standards Culture Exploration Drilling.
We've also got VRIFY, GetWet Solutions, DSI Underground, Silverstone, WA Water Bores, and Brooks Airways.
And bloody use Spark. You want to see the bloody Spark Christmas tree going off? Get Spark and watch the YouTube video on how to fucking use it.
Hoodaroo, Money Miners.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.